And then right around 9:20 in the morning, I put together what I call my favorites list. This is the best of the best. I take my 12, 13, 14 gappers and take it down to my 3 or 4 favorites. Well, what was my number one favorite? Take a look at it. I'll circle it on the screen. What was my number one favorite? Amazon at 1905, over $1,905 with a stop loss below $18.99. I mentioned it multiple times to Twitter community, Stock Twits community, as well as my chat room, okay? And then right when the market opens, we traded Amazon. You can see this beautiful pre-market breakout that triggered over 1905 after the market opened. I tell you guys every morning that I do the same thing every morning, and that same thing is I scan for dollar gainers and dollar losers on the TradeStation platform. I'll put in the pre-market today. Okay, what you are seeing on the screen right now is pre-market, 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 pre-market. Now, unfortunately, it's on PACB, but that's not the key here. So I always tell you guys, I look first at the volume. Number one, I look at the volume. So if a stock is doing less than 5,000 shares, I'm probably not going to click on it. If it's an ETF, an exchange traded fund, I'm probably not going to click on it. So this morning when I woke up, and I saw this list on the long side, I saw BYND, and I thought, that's ridiculous, a $23 gap on this, 13%. I'm going to look at it. Sure, I'm going to look at it, of course. All right. But then the next one down was Amazon, AMZN, right here. I'm going to put a circle on it for you, a box around it for all you guys, okay? It had 63,000 shares, which is a lot for Amazon in the pre-market. It wasn't extended. Some of you go, whoa, it's up $17. It's still only less than 1%. Guys, real quick, I don't care what the price of the stock is. Why? Because if you have a really small account, like $3,000 or $4,000, you shouldn't be trading a lot of shares anyway. 1 or 2 shares of Amazon, perhaps. And if you have a small account, guess what? I hate to bust your bubble. You're not that good of a trader to begin with, because if you were, you wouldn't have a small account anymore. I don't mean that in a rude way. I'm just saying I'm tired of these people saying, Jared, you trade stocks that are too expensive for me. No, I don't. I don't. If you have a $3,000 or $4,000 account, then you shouldn't be risking more than $30 or $40 per trade anyway, which means you might only be trading like 1 or 2 shares of Amazon. Okay, that's simple. Really, seriously, I'm not joking. So I saw Amazon on my list today. Now, there are plenty of other stocks that I saw on the list today that I'm not going to talk about right now, because this today is about Amazon. So I went down my dollar gainers and dollar losers list in the pre-market around 8:50, 8:55 in the morning, just before 9 a.m. I came upon Amazon. I clicked on the Amazon chart. I literally hit click. Now, this is what I saw when I hit click. Click. This is what I saw. This is the Amazon pre-market. Look at the time, 7, 7:30, 8 o'clock, 8:30, 9 o'clock. Okay, I'll move it over just a little bit more. Okay, right there. If you go right there, that's 9:05. Look what I saw, guys. I saw a beautiful pre-market consolidation on this. But before I even got to the 5-minute, what did I do first? I first went to the daily and the 60. Guys, I literally go over, I click Amazon, and the first area my eyes go to are the 60-minute chart and the daily chart. So if we look at the 60-minute chart, what do we have here? Right there at 1900. A beautiful consolidation for 1, 2, 3, 4, 5-day consolidation, mostly because the market consolidated for 5 days. So I looked at Amazon on the 60-minute and daily and go, wow, this thing is a really beautiful 60-minute breakout. This is gorgeous. Okay, I look at the daily and I want to look to the left. I say, okay, look to the left. All right, $1917 right there. 1917.50 is the pivot. That's the pivot. Let me blow it up real quick. That's the pivot. Guys, where does Amazon stop today? Just above that area, didn't it? So I told the chat room members, guys, if we trade Amazon, we only have room to 1917. You know what our target was today? 1917, okay? I'll come back down. So I bring up, and I'll do it one more quick time. I bring this up and I click on Amazon. I click on Amazon, okay? Then I immediately, upon clicking on the symbol, look at the 60-minute and the daily chart and I go, is this a good gap? And then I determine after a 5-day consolidation and a very small gap up, yes, this is a good gap. And I tell everybody in the chat room, guys, if we can get over the 186 area on the Qs, Amazon's going to rip today. So our job, now that we like the 60-minute, now that we like the daily chart, we call these the higher time frames. We call this a top-down approach. You use the higher time frame bias to look for a lower time frame entry. So everybody is asking me about this 3-bar play or breakouts, and they're going, how do you find these, Jared? Guys, all I do is scan on the daily chart and the 60-minute chart, and after that, I wait. I wait to see if it gives me a breakout or a buy setup or a 3-bar play. In this case, what was it giving me? It was giving me a beautiful, beautiful, gorgeous pre-market consolidation inside of a 60-minute consolidation. Think about that. That's what we call multiple time frame analysis inside of a market that was about ready to break out. Think about what I'm saying. I call this the trifecta. The market's breaking out on the Qs. Amazon's a NASDAQ stock, okay? Amazon is about ready to break out on the 60-minute chart, and Amazon is looking beautiful for a pre-market consolidation. So let me put it on the screen for you right now. Oh, look at that. 9:02 in the morning. 9:02 in the morning. Jared says, watch Amazon over 1905 for a small pre-market nibble. Market's a little bit extended. Guys, that was 9:02 in the morning. 9:02 in the morning, okay? How did I know that? Because look at the pre-market. Look at the pre-market, right? Red bar came in, tried to push it lower, came right back up. Big bottoming tail. Sellers tried to come in, pushed the stock right back up. Then it chops around in a narrow range right around 1905 with a stop that would be 1900. What did I do? I took a paltry, measly 10 shares of this in the pre-market. And then right after the market opened, I took another 10. I had 20 shares. And then after that, our job was to wait. So let me pull it out. Boom, 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 boom. Okay, right here is the market open. 9:30, the market opens. All right, 9:30, the market opens. Okay, so I tell the chat room, I say, guys, let's trade Amazon over 1905 with a stop at 18.99. Why was the stop 18.99? I'll show you. See the low? 1899.79. I said, let's put it 80 cents under that area. Let's just do that. So we got in at 1905. We put our stop loss at 18.99, and I said target is 18.17. I took some off at 1-to-1, and I took some off at 2-to-1. I ended up only getting about 1.5-to-1. I should have gotten about 1.75-to-1. So I got out a little early, but look where the pivot was. 1918.13. $1,918.13. Well, guys, where was the daily pivot? $1,917. Do you see what I just did there? I will do it one more time very briefly for you, okay? Guys, listen. I took a pre-market dollar gainers and dollar losers scan. I went down the list on this, but I didn't get very far because I immediately saw Amazon. I don't know if this is a nice gap. Guys, I don't know yet. I don't know if this is a nice gap yet until I click on it. I click on Amazon in the pre-market before 9 a.m. because it has 63,000 shares. I want to know what's happening. So I click on it. As soon as I click on it, this comes up on the 60-minute chart, right? This comes up on the daily chart. I see a 5-day consolidation. I think this is a nice gap. Is it a level 1 gap? No, but it's a nice gap. Market looks like it's going to break out. Amazon looks like it's going to break out on the 60. My job is to drill down to a lower time frame. What do? I drill down to the 5-minute chart. What do I see? Pre-market. I see a consolidation here. This is really pretty, guys. So right when the market opens, I say, look, everybody, let's buy Amazon. Now, actually, I said this long before the market opened. At 9:02 in the morning, I said, guys, check out Amazon above 1905. Why? Because it had such a beautiful pre-market consolidation. Our stop loss will be under the base here. So 2 minutes into the day, Amazon was flustering around a little, and I said, sweet. So now we take this off, okay? Take this off. We'll go down to like a 2-minute chart, and I'll bring this out. Okay? Right here, 1 minute's a little better. Sorry. Let's bring it out. We're sitting there right there. Look at 1905. It's almost a 3-bar play. Almost. 1905 right there by low of the day. The only reason this is not a 4-bar play, the only reason, is because bar number 1 was not a wide range bar. If bar number 1 was a wide range bar, this would be a 4-bar play. So realistically, it's a 1-minute breakout inside of a 5-minute pre-market breakout inside of a 60-minute breakout. Now, do you see what I did there? I used what we call the top-down approach, and I started with a higher time frame bias, higher, lower, neutral. Then I drilled down to a lower time frame 5-minute pre-market base and said, wow, I have a pattern on the 60-minute chart. I have a pattern on the 5-minute chart. And now I want to see if I can get a 1-minute entry pattern off the open. And sure as shit, I got it. 1905, using the pre-market as well, using the 5-minute as well, using the 60-minute as well, and boom, blast off. Amazon looks pretty good, guys. If the market doesn't tank, Amazon looks decent. I'm going to do it, guys. 1905 by 1899. All right, so $6 stop loss on Amazon. But again, we're going to need the market on this thing. $6 stop loss. We're going to need the market on this thing. Okay? Make sense what I'm saying? So 1905 by 1899 on Amazon. It's a whippy stock, not for the faint of heart, guys. Okay? So Amazon, how did I get filled that late? Are you shitting me? All right. Okay, guys, so we need a lot. That's all I'll tell you. We need, I don't know, 12 bucks. We need like 19, 15 or something like that. All right? All right, guys, I'm out 1/4 of my Amazon like I normally do. All right, so Amazon's coming in a little bit, guys. We don't have much locked on Amazon, to be honest with you. We only have 200 locked on Amazon. All right, got about 280 locked on Amazon, guys. Not going to get my full target on this thing, but Amazon, I missed my full target on this, guys. It went to 1917, and I didn't get out. I left 10 shares, which I should not have done. So we'll see if it comes back up. At this point, I'd like to get 6 something out of it. All right, I'm out Amazon, guys. I had about a $400 risk on that, and I should have made about 700. I made 600, so I really broke my plan on Amazon. Guys, Tesla. All right, so out Amazon for 1.5 hours, which is not ideal. Okay. I went step by step on how I do this. Guys, what you just saw me do on Amazon is what I do every single morning for every single stock I look at. Yes, I'm being a little dramatic as I speak to you. I get all that, but that's all I do. Now, of course, you have to know professional trading strategies to know what a good gap is, to know what a good pattern is, like a 3-bar play, like a breakout, like a climactic, like a buy setup, right? Like a wedge or a triangle or something like this, right? Of course you have to learn that. You also have to know what good money management is, what good trade management is. Every trade we have has an entry, a stop loss, and a target. Stop limit orders for entry, stop market orders for stop losses, and limit orders for targets. All this is in the 525-page, 18-hour PTS course, guys. But I'm giving you golden nuggets here for free. Golden nuggets. What I just went through is exactly what I do every day. I didn't hold out anything. The only thing I didn't tell you is what are my gap scanning criteria. But I did tell you a little bit of that in the last video, didn't I? Guys, I'm trying to help you guys be the best traders that you can be. I mean that sincerely. I really am. But just listening to my YouTube channel will make you a better trader, but you really should still be getting a full course education at some point. Point is, guys, Amazon did very well today. So I'm going to bring up the Amazon slide now, and you can see just what we did on Amazon, okay? I only made $600. I should have made closer to 700 on it. Okay, given my risk level, I should have made closer to 700. I chickened out a little bit. That's on me. I need to fix that next time. Okay, so Amazon ended up being a good trade for us. Why? The daily was nice. The 60 was nice. The 5-minute was nice. The 1-minute was nice. And the market was nice. That's it. It's a systematic approach to making money. All right, some of you are saying, well, what if it didn't work? Well, I have a stop loss for that. If it didn't work, I would have lost like $400. Okay, that's it. If it didn't work, that's what would have happened. All right. I only have to win 50% of the time to do well in this business. They don't all work. Out of 10 trades, 5 work and 5 don't. I don't know which 5 are going to work and which 5 don't. My job, my only job, is to pick the best patterns I can possibly find using higher time frames, 60-minute and daily charts, and drilling down to 1, 2, and 5-minute charts for entries. That's all I can do. After that, it's up to the market whether or not it works or not. It's not my job. That's the way I look at it. Guys, it's just a systematic approach to making money. That is all that trading is, a systematic approach to making money, okay? That's all trading is. So I hope you guys enjoyed that video.
Holy shit. It's Father Christmas.
Yeah. And if you're good, you get what you deserve. Fucking come here, yeah?